Business credit. Why do you care? Why do you need it? Personal liability versus personal credit reporting, and of course, the amount of money you can get by having business credit. I'm Joe Chavarria, and this is another exciting episode of Cup of Joe. Let's get started. So before I begin, I want to just remind everybody to like, share, and subscribe to this information. And I genuinely would like to know if you are a business owner and you are searching for capital for your business or you're trying to build business credit, comment yes below if you are a business owner that has questions around business credit or trying to get some money for your business. And if you're not a business owner, still comment below no, just so again I can kind of engage with who my audience is and to just continue to tailor my content to fit my audience. So let's get started. So again, business credit, why do you care? Why do you need it? Why it's important, and how much more money you can get by having business credit. So let's talk about first the credit reporting aspect. So one reason why as a business owner you want to build business credit is so you can avoid a lot of loans or credit cards you take out for the business. You can avoid those accounts reporting to your personal credit report. And this is good for a lot of different reasons. So let's say that you're getting married, you're going to buy a house in the future, you have a business and your business is growing and you need to get some capital for the business. You don't want to get accounts that are going to report to your personal credit report and then could hinder you in, let's say, a mortgage process, right? Now you have all this debt on your personal credit report. It may be driving your credit score down. So that's a big reason why you really want to separate the two. You want to have personal credit, you want to have business credit. So you have a business, you really don't want your business accounts to end up on your personal credit report to avoid your score being damaged by it or to avoid too much debt on your personal credit report. There's a lot of other reasons, and that's probably the best ones, the main ones as to why you want to have your business credit accounts reported to your business credit report only and leave your personal accounts in the personal name only. So you kind of separate the two. They don't commingle. You don't have any issues when it comes to anything you want to do with yourself personally, whether it's to, again, buy a house, maybe buy an investment property, get a better interest rate on vehicles, so on and so forth, right? You really want to separate the two. Another reason why you want to have business credit is the liability aspect of it. So, let's just say that you build, you get some loans, you get some credit cards in the business name, and the business is the one that owns these accounts. Let's say life happens, right? It happens to the best of us. You get injured and you're out of work for a bit, or a natural disaster occurs, and the business stops or comes to a halt, and then all of a sudden, you can't conduct business. But guess what? These creditors still have to get paid. If you personally guarantee those accounts, then you are personally liable for those debts, and you're going to have to personally pay those debts back whether or not the business is around or not. And this is where you see a lot of business owners, had to file bankruptcy because of this. They were sued and they had to, have some of their assets seized because of this. And this is and these are business debts. And this is because they personally guaranteed everything and did not put these accounts in the business name only and make the business responsible for it. They personally made themselves responsible for it. So that's another reason why you want to build business credit and make sure the business is applying for these accounts. Make sure the EIN number and the LLC is responsible for those accounts. So in the event that natural disaster strikes or life happens and God forbid the business has to shut down or it has to come to a halt for a bit, you personally are not liable. So if the debt goes unpaid, on the business side, that creditor can maybe put a lien on the business or a lien on the bank account. You don't want them putting liens on your house. You don't want them putting liens on your personal bank account. You don't want any of that. You want to keep it separate, right? And so if the business has to just dissolve due to natural disaster and the business was on the hook for everything, not you personally, then there's really not a lot of recourse for that creditor to try to pursue against you personally for the debt, because you personally never guaranteed it. You never made yourself personally liable. It was always the business entity itself that was responsible. Now, I'm not saying this to encourage you to, hey, like, this is how you cheat the system. This is how you just quickly get loans and not have to pay them back. I'm definitely not condoning that kind of behavior. Definitely perform ethically here. But what I am saying is, if you perform ethically, you do everything right, don't make yourself personally responsible for these debts, knowing that anything can happen in any moment, and you may need to go start another business, or maybe go do something else, maybe get a job that requires a credit check. If you shut down your business, you don't want your business debt just following with you and just hindering you for the rest of your life. So that's the second reason why you want to separate the two and get business credit and versus using your personal credit report. And the last thing is the amount of money. This is the fun part. So you can get so much more money by having business credit. In fact, you can get approved for trade lines for office equipment, for office supplies, for a lot of things that you can use for your business just by having a DUNS number. So even before you have any business credit established, you just have an LLC and a DUNS number. There's companies that will approve your business for net 30, net 60, net 90 accounts. And that's where you can buy things on their website for your business, and they send you an invoice. You pay it within the due date. If it's net 30, that means it's due in 90 days. If it's net 40 or net 50, or net 15, net 60, you're just paying it back before the due date, and those payments get reported to your business credit report. And so you can get a lot more money on the business side, even if you have business credit established. Let's take the SBA, for example. If you're wanting to get an SBA loan, SBA loans are one of the hardest loans to get approved for. And it's because they have the best interest rates, they have the lowest rates, they have the best terms, they give you the most amount of money. SBA is awesome. So an SBA, from a credit score perspective, a lot of them go off of the FICO SBSS score. So it's a combination score. That's a combination of your FICO credit score and your business credit score. So they want to see a good combination of both business credit and personal credit to get approved. Typically for FICO SBSS, they want to see above 180, maybe something above 200. The FICO SBS score goes between 0 and 300. And to just get into like the mid 100 range, you need to have excellent personal credit, no business credit. But let's just say you have okay personal credit, you can have a very good FICO SBSS score if you have okay personal credit. And by okay, meaning like mid to high 600s, low 7s. And you have business credit established that's also healthy. That will give you a very good FICO SBSS score, help you get approved for an SBA loan. An SBA, they can approve you for, I've seen up to $5 million on an SBA approval. So there's a lot more money available when you have business credit. Also, when you're applying for credit cards, let's just say for business credit cards, if you've been in business for 2 years, you have some business credit established. Let's just say if you were to use your personal credit report to, leverage that to get approved for the business credit cards, maybe 10,000 here, maybe up to 20,000. But if you have business credit, sometimes you can go to 40, 50, $60,000 on up in approvals for business credit cards. So there's a lot more money when you have business credit. So that's another, probably in my opinion, probably one of the best reasons to get approved, especially if you're growing and you need capital. You don't want to give up your equity. You don't want to take on any bad loans. You want to get some revolving credit lines so you can move a lot faster and have a lot of flexibility. You got to have business credit. So again, thanks for watching this video. Hope the information was helpful. This is my plug I want to throw out there. If you're a business owner and you are needing help with building your business credit, or you have questions around how to get money for your business, or even if you have bad personal credit, you have issues with your personal credit and you're a business owner and you need some help in this arena, send me an email, joe@creditagents.com. Love to see what we can do to help you. Also, just give us a call at 1-800-786-2120, and one of my team members at the office will be more than happy to look into your situation and see how we can help you. Again, it's 800-786-2120, or you can send a text message to our main line, which is 281-756-7060. Shoot us a text message. Let us know how we can help you. We're here to serve you. And again, I'm Joe Chavarria. Thanks for tuning in here. I'll see you guys on the next one.